Well, who would have thought that in our greatly partisan environment, Congress can actually get something done quickly to ameliorate the economic impact of this pandemic? Well, they did. On March 27th, they passed the Coronavirus Aid, Relief, and Economic Security Act, also known as the CARES Act. And among many other provisions, there are substantial tax benefits for individuals and businesses. I will spend a few minutes with you covering the highlights of those benefits, so that hopefully there is at least one of them that you can take away and see if it applies to you to help you and your family make the best of this economic shutdown. So first up is the centerpiece of the CARES Act for individuals, and that is the $1,200 rebate you've all heard about. That applies for all single taxpayers and head of household. It's double that amount, $2,400 for married filing joint couples. There's also an additional $500 of credit for each qualifying child in the family. That's, generally speaking, a dependent who's under age 17. In total, for an average family of four, total rebates would be $3,400, and that's clearly not insignificant at a time like this. Now, are there any ineligible taxpayers? Unfortunately, yes. In addition, of course, to trusts and estates not being eligible, the law has carved out of the rebate program any taxpayer who can be claimed as a dependent on someone else's return, any non-resident taxpayers or taxpayers who don't have a Social Security number, and those taxpayers who are married to taxpayers who don't have a Social Security number. So that's the way the law is right now. Perhaps there'll be a correction in later legislation. There's also a significant group of taxpayers also not eligible, and that would be taxpayers in the higher income. So that's defined as for single taxpayers with adjusted gross income over $75,000. The amount of the rebate is phased out by 5% of that excess. For married filing joint, the cutoff is $150,000, and again, it's a phase out of the credit equal to 5% of the amount over that threshold, $150,000. For head of households, the threshold begins at $112,500. So when can taxpayers expect to get their rebate? For most eligible taxpayers, by the end of April. It'll be automatic, either through direct deposit if the taxpayer filed a return for 2018 or 2019 and had a checking account number on file with the IRS, or if the taxpayer is receiving Social Security benefits or veterans benefits, automatically through the checking account on file with the IRS. Now, otherwise, the IRS will have to send you a check, and that will take several more weeks or months for Treasury to figure that out. Now, you can check the status of your rebate, or perhaps attempt to get the rebate faster by giving the IRS your checking account information. It will be at the following site, irs.gov/coronavirus/getmypayment. I also have that listed in my resource page at the end of the presentation, along with several more FAQs that the IRS has put out for unusual circumstances. Now, one more interesting implication about the income thresholds reducing the amount of the rebate if you start going over those upper income thresholds is that, well, since this is a credit for against 2020 taxes, what happens when you file your 2020 tax return and your income threshold is either above or below what it was in 2019 or 18 when the IRS used that earlier information to figure out how much to give you. It turns out, according to the statute, that if your 2020 income is above the thresholds that were used previously, the IRS won't take the money back. And what happens if your 2020 income is below the threshold in 2020 versus what the IRS was using before to say you were in the upper income brackets? Apparently, the credit will be available in part or in full next year to you when you file your tax return. Now, moving on to another major provision in the CARES Act that benefits millions of Americans, unfortunately, who have found themselves furloughed, laid off, or incurring reduced hours at work. And that is a very substantial expansion of eligibility for unemployment and an increase in the amount of the compensation. So a little bit of background first. Most states provide for unemployment assistance approximately equal to half of what the employee's gross pay had been prior to being unemployed. And they provide for, on average, about 26 weeks of pay. Depends on the state, but that's most states. Now, what Congress has done is enhance that program 4 ways. One is they've told the states to extend their normal pay period an extra 13 weeks. So that would be eligibility for 39 weeks potentially. 2, Congress is going to fund the states for the first 16 weeks an extra $600 a week, flat, per eligible employee. So that's on top of whatever the state would have normally paid per week. Congress adds $600 to that per week. Third, Congress waives the requirement that the employee certifies that they've been looking for work. That's been waived during the pandemic period. And 4, Congress has greatly expanded who the eligible workers would be to now include independent contractors, gig workers, sole proprietors, folks before who were never eligible, including part-time employees, those who have a limited work history, those who have to stay at home because their children can't go to school now, and generally anyone who can certify that they've been directly or indirectly affected by someone who has COVID-19 in their household. So check out your state's separate unemployment compensation website, look for the COVID-19 benefits, and see if perhaps that might apply to you to help soften the blow during this economic shutdown. Next, I want to move to a few of the various other personal income tax benefits that were provided in the CARES Act, specifically 3 of the various provisions. One is the automatic extension of the original due date for personal tax returns that were due April 15th. It's now extended till July 15th. But that also covers all other types of tax returns that were due April 15th, such as estates and gifts, trust, and all the related tax payments associated with those returns. Also, the July 15th due date applies to IRA contributions that would have been due April 15th, as well as any estimated payments that would have been due April 15th and June 15th. So obviously a key matter to not only give you some breathing room on preparing all of that, but also the cash flow impact is delayed a bit. Second key provision, also relating to cash flow, to soften the blow, so to speak, Congress is going to relax the 10% penalty that relates to taking out distributions from your retirement accounts too early. And the normal age limit on that was 59 and a half before you could take distributions out without a penalty. Again, that penalty was 10%. So that's been waived temporarily so that you can take up to $100,000 from your retirement accounts without facing that 10% penalty. And the tax on the distribution would be payable over 3 years to, again, lighten the tax load on that to preserve cash for a while. The third major provision that I wanted to cover here relates to business losses that a taxpayer may have from their pass-through businesses, say a Schedule C, sole proprietorship, independent contractor situation, or a partnership or an LLC or an S-Corp. That's a pass-through business, and the tax law back in 2017 had placed a limit on the ability of a taxpayer to use their losses currently. They limited it to $250,000 for singles and $500,000 for married filing joint, plus some inflation adjustment. But the important part about the CARES Act is it lifted that limit temporarily for not only this year but also 2018 and 2019. So what that means is that not only can a taxpayer use more of the losses against income and reduce their 2020 tax bill, but they can go back and amend 2018, 2019 and use up more losses than they thought they could. Also, Congress brought back the ability to carry back losses so that you could go back to your excess losses from 2018 and 19 and carry them back up to 5 years, back to years when presumably your individual tax rate was higher than it is now, and get more cash back. So it's a pretty good thing. Make sure you see your tax advisor because there's a lot more complications that I can get into in this presentation.